Hey everybody, Chuck Barone here on Friday, September the 22nd, 2023. Thank God it's Friday. Let's wrap up a crazy freaking week here. We learned a lot this week, and we got a lot of information to talk about today. Before I get rolling though, let me of course welcome everybody to the show, and as always, thank you guys for your support. We appreciate you guys watching these videos, supporting the show. And you're the reason we keep coming back doing it every day. We appreciate you guys. All right, so let's talk about these markets today. Today was kind of a weird day in the market because there was no real data for the market to be looking at. So it was kind of just the debate back and forth on the usual topics. Will the Fed raise rates again? When? How much? When will they start cutting? Lots of opinion now from different analysts who've been pretty much wrong all the time, man. The Fed has pretty much telegraphed everything they're going to do that they've done so far, and they've pretty much stuck to their guns. You know, I thought this past week that they would actually go off of what they've been saying, this pause that they had this month. I really thought they would raise with the data we've been seeing. They didn't. That makes it pretty much, I think, in my mind, inevitable that we'll get another rate increase in November. I guess, well, they'll meet again in December too, but nobody wants to have the Christmas rate increase, I guess. So the markets today just kind of drifting, a little bit of a negative sentiment in the stocks. Markets falling today, but not gigantic, nothing earth-shaking. The Dow falling 106 points, sitting at 33,963. Now that's a big thing, though. That's below 34,000. So now it breaks a support line there, and now they're going to have to fight to get back above 34,000. The S&P falling, now this is the broader market, falling 9 points, sitting at 4,320. The NASDAQ, tech-heavy, falling just 12 points, 13,211. So in essence, what we had in the stock market today was a big nothing. The market's still digesting, trying to figure out what the heck's coming next. I don't think they really have a clear answer. There's a lot of different opinion, a lot of different analysis, which is in a lot of cases nothing more than educated opinion, educated guess. Now we're going to talk about our educated guesses coming down. Bond market today. Well, bonds actually rallied. People taking advantage of these higher yields, scooping up bonds. So bonds rallying today, yields falling. The 10-year coming down just 4 basis points, sitting at 4.44%. The 2-year also falling 4 basis points, sitting at 5.11%. So good yields on bonds. Investors flocking to these bonds. I'm glad they are, because there's a pretty massive supply of treasuries right now, with the U.S. government borrowing money like there's no tomorrow. So treasuries rally today. I think people the market has implied that these are peak rates, so investors trying to snap up bonds at the highest possible rates. The dollar today also up small, sitting at 105.60 on the index. Good strong number for the dollar. Still the king of the hill compared to the currencies it's competing against. There's not really much news. The dollar, I think higher rates obviously lead to a stronger dollar. So the dollar believing rates are at least going to stay higher longer, if not go even higher. Precious metals today, a nice day with gold and silver in the face of a very strong dollar. Usually when the dollar rallies, gold and silver don't, but today the opposite, gold and silver moving up a little bit, with gold plus $5.40, sitting at $1,924.90 for an ounce of gold. You had silver up 14 cents today, sitting at $23.52. So a good day for gold and silver. Pretty good prices, I think, fair value. As this dollar comes down, you're going to see your $25 silver and your $2,000 gold again. Oil today, continuing its run, up 67 cents, sitting at $90.30 per barrel for West Texas Intermediate. I I got to admit, guys, I'm not a fan of high oil prices, and I don't think anybody watching this show is either. They're here in Vegas, they're just raping us. The price of gas now sitting, an average price for regular gas sitting at about $5.08. Just horrendous. And a guy like me who has to use, premium fuel, I get to pay about $5.70 a gallon. So it's not a good scenario with oil. I think that we'll see. High prices like this tend to tamp down demand. We know the Saudis are losing a lot of money every day. By cutting 1 million barrels a day, you're talking almost $100 million a day they're losing. A lot of money. Russia too. So we'll see how long they'll keep their cuts in place. And as we all know, OPEC is notorious for cheating, right? They announce these cuts and then they don't really follow through. They just work the psychology of the market. So it'll be interesting to see what their real production is. And once that gets announced, then we might see some moderation in some of these oil prices. Bitcoin today also rallying, just a small, up $13.82. Last I saw, sitting 26,546.81 cents for Bitcoin, a decent price, holding its own. All right, so there's not really any data to talk about today. Nothing coming out from the government. We know we got to likely have a government shutdown coming next week. And that is not going to be good. Hopefully, if it does happen, which I think is likely, hopefully it won't be a long-lasting one. All government employees going to start getting haircuts, furloughs. It causes big kinks throughout the entire system. It's not good for our economy. It's not good for our reputation in the world. It makes us look even more lame and inept than we already look. And we can't take care of our own business, man. We got our debt creditworthiness downgraded because these knuckleheads in Washington got to be posturing all the time. And now we're going to do the same thing again, man. It's just silly is what it is. Okay, and this is no way to run the greatest country on the face of the world. They need to fix this stuff. But anyway, enough about the lameness of government. You guys know I can't stand them. Hate them both sides, right and left, red and blue, both lame. Both complete bullshit artists who care nothing about the working class. So until we find a party that cares about the working class, I'm going to be an equal opportunity hater. But I thought today would be a good day to talk about what in the heck's going on, take a look at where things are and where we think they can go. I was just looking at this like, wow, where the hell do we even start with this, right? So I figured let's start with the Federal Reserve and interest rates. Now the market seems to have their view, and my view is a little bit different than markets. The market feels like we're in this perfect scenario. We're going to have this perfect landing. We're going to stick everything. We're going to get rid of inflation. It's not going to take us a decade. It's not going to take us we're going to get rid of it in less than 2 years. Really? Okay. In the face of everything we've talked about, the government borrowing money like crazy, cities, states, corporations, consumers, everybody borrowing money at record rates. That's big inflation. You got all of this stuff going on at the same time, putting pressure on the Fed, where if maybe in a normal world where things function normally, maybe they could get rid of it in 2 years. I just don't see everything working out perfectly for them now. So I really believed rates would go up this week. They didn't. I really believe they will at least get one more increase this year, bringing the Fed funds rate up to 5.6. I'm pretty bearish on the idea of big rate cuts coming next year. Although I guess if we had a deep recession, that could change this scenario. Again, that'll get to the Hobson's choice I've talked out about the Fed having, where they're going to have to choose between their mandate, stable dollar, stable prices, low inflation, or saving the economy And it's going to be an election year while all of this is happening. It's going to be fun and amazing to watch it, right? So in my mind, I think that the market is certainly more dovish than I am on where rates are and where they're going to go, how long they're going to stay there. You guys have all heard me say, I believe the era of easy money, as far as, like mortgages at 3%, 0% on savings, on money markets, that's all done now. You're going to start seeing the world work the way it has always worked until very recently, where savers are rewarded and debtors are punished. I think we've had this experiment where they're going to try to make debt a good thing, and they've managed to convince a lot of people that it is. I mean, if you look at the levels of debt everywhere, there are records everywhere, every friggin' where. So I think that a little bit of a taste of the realities of what debt can do are necessary right now. I'm old enough. My grandparents were a product of the Depression, and I remember the way they looked at the world was so much different than the way we look at the world now, because they had experienced real hardship. Real hardship. Not the stuff, today, you watch the world today, the slightest, tiniest inconvenience can make people go friggin' crazy. Lose their minds. Road rage. At the airports, on airplanes, people screaming, freaking out. Everywhere, people, nobody has any decorum anymore. I gotta tell you guys, the market, the world, everything off its rocker. But we have our own little world here, right? The world of normal, the world of reality, the world of saying it as it is, not as we wish it was. You have to live in the world as it really is, guys. Not, we wish it was better. We wish everything was better, but until it is, we live in it as it is. So with, the Fed and rates, I tell you, are going to stay higher. The stock market is going to have some difficulty because, as they got a two-pronged front coming at them. Okay, most corporations are bloated with debt, massive payrolls, too many employees, over-bloated executives, not to mention massive amounts of debt. So as rates bite these corporations, and they roll their debt over at higher rates, they borrow new money at higher rates, there's going to be a reckoning. And it's going to lead to higher unemployment, or it's going to lead to lower earnings, because there's not much left for them really to cut from, unless they're going to start cutting their own salaries, and we know that's impossible. So the stock market, I think, can have a little bit of a rocky transition into these new higher rate environment. Same with the bond market. You can already see the adjustment happening there. The massive volatility, bond market moving 15 basis points up and down all over the place with no real direction. I think that the stock market is starting to come, or the bond market is starting to come to grips with the fact that rates are going back to normal. Now it's going to be interesting to see how it all plays out once the inversion goes back to normal. So which is going to happen? The 2-year right now sitting at 5.11%. The 10-year, 4.44%. Now, on a normal yield curve, 2-year would be lower than the 10-year, right? But the 2-year now sitting at 5.11, does it come down to accommodate the 10-year at 4.44? So you think 2-year rates are going to fall, 10-year rates rise? You think that the 10-year or the 2-year sitting at 5.11 now, the 10-year is going to rise above that, and because sooner or later this yield curve is going to get back to a normal yield curve. It's going to be fascinating to see how rates turn out when it does. Oil, I think, I've been pretty bearish on oil. Maybe it's more wishful thinking than reality, but I think oil is going to be, now we have a new numbers on oil. I think that until we show real recession issues around the world, or a massive glut in supply, where oil is going to stay high. I think gold is going to be a prisoner to the dollar, as it always has been. And as the dollar comes back down to earth, gold will rally. What we've been telling everybody still goes. Save 10% of your income or as much of your income as you can. Don't take on new debt. The debt you have, try to pay it down as much as you can. Invest your money conservatively. Don't take risks. Holding on to the principal is more important than big gains, right? Basically, to be thoughtful the way you spend your money. We all have money, we make income, we have to spend money to live. Be thoughtful the way you spend your money. Stay away from the impulse stuff. That's where the money gets wasted. So be thoughtful. You're doing this stuff. You're holding out. Even through all of this turmoil, your money's going up. Your savings are going up. What we've been advising as far as investing conservatively, maybe your returns aren't as robust because these markets have been rallying, but you still got a fair return with much less risk. So we think we've been right. And our advice has worked out. But anyway, guys, I'm getting a little over time here. Let me go. Wish you guys all a super awesome weekend. Get away from these markets. Get away from reality for a little while. Move into the real reality of your friends and your families. Relax. Recharge your batteries. We'll be back to bring you guys the news on Monday. We'll see what the heck's going to happen next week. I can't wait. The Bills got the Redskins this week. We're going to win. Go Bills. Until Monday, guys, have a great and awesome weekend.